Should you invest in index funds and let the market work for you? Or should you take control and pick individual stocks? This question has puzzled millions of investors for decades. In today's video, we'll break it down step by step. What index funds really are, how stock picking works, the pros and cons of each, real examples of wealth-building strategies. And finally, which one may be right for you depending on your goals, risk tolerance, and time. By the end, you all know exactly where you should put your money to maximize wealth over the long term. What are index funds? Let's start with index funds. An index fund is simply a basket of stocks that mirrors a market index. For example, the S&P 500 Index Fund holds the 500 biggest companies in the U.S. When the market goes up, your fund goes up. When the market goes down, so does your fund. The beauty of index funds is their simplicity and diversification. You don't have to research hundreds of companies. You don't have to worry about buying or selling at the right time. You just invest, and over time, history shows the market grows. In fact, from 1926 to 2023, the S&P 500 returned about 10% annually on average. That means a $10,000 investment could grow to over $1.7 million in 50 years without you lifting a finger. That's why Warren Buffett himself said, most investors, large and small, should stick with index funds. But is it really that simple? Not everyone agrees. What are individual stocks? Now let's look at the other side. Individual stocks. This is where you pick and invest in specific companies you believe in. Think Tesla, Amazon, Nvidia, or that small startup you think could become the next big thing. The potential here is huge. If you had invested just $1,000 in Amazon in 1997, today it would be worth over $1.5 million. That's the dream of stock picking. Finding the next Apple or Google before everyone else. But here's the reality. It's much harder than it looks. Studies show that about 84% of professional fund managers, people paid millions to pick stocks, fail to beat the market over 15 years. If the pros struggle, what about everyday investors? The pros and cons breakdown. Let's break it down side by side. Index funds. Pros. Diversification. You own hundreds of companies. Low fees. Some funds charge less than 0.03%. Time saving. No need to research or trade. Proven long-term track record. Index funds. Cons. You'll never beat the market. You only match it. Less exciting. You don't get bragging rights at dinner. During crashes, you still ride the downturn. Individual stocks. Pros. Unlimited upside. You can beat the market. More control. You choose where your money goes. Exciting. Feels more engaging than just investing in an index. Individual stocks. Cons. Huge risk. One bad stock can wipe out gains. Time-consuming. Constant research, earnings reports, and news tracking. Emotional roller coaster. Greed and fear often lead to bad decisions. Real-life scenarios. Let's imagine two investors. Investor A, the index fund. Investor. They invest $500 every month into an S&P 500 index fund. Over 30 years, assuming a 10% return, they'd have around $1.1 million. Investor B, the stock picker. They spend hours researching, buying, and selling. Maybe they hit big wins like Tesla or Nvidia. But they also take losses on failed companies. Over 30 years, they could end up wealthier than Investor A. Or they could end up with much less. The key difference? Consistency versus uncertainty. Index funds almost guarantee wealth if you're patient. Stock picking can build fortunes or destroy them. Which is best for wealth building? So, which one is better for building wealth? If you're someone who doesn't want to spend hours analyzing companies, doesn't like stress, and wants a high chance of success, index funds are your best bet. If you're passionate about business, enjoy research, and can stomach volatility, then allocating a portion to individual stocks might make sense. But here's the golden rule. For most people, a core portfolio in index funds plus a small portion in individual stocks is the best balance. That way, your wealth grows steadily, while you still have the chance to hit a home run. At the end of the day, wealth building isn't about chasing the hottest stock. It's about discipline, patience, and consistency. Whether you choose index funds, stocks, or a mix of both, the earlier you start, the more your money can grow. Now, I want to hear from you. Do you invest more in index funds or do you prefer picking stocks? Drop your thoughts in the comments below. And if you found this video helpful, hit that like button, subscribe for more finance insights, and share this with someone who's deciding where to invest.